Hey, what's up, guys? Welcome to Chibind Brothers. My name is Joel. I know it's been a while since y'all saw me, so I'm back today, and we're going to look at a few charts. So today we'll look at the chart of Bitcoin, Ethereum, Cardano, Solana, and then we will look at other things. We'll also look at USDC, and I'll show you what I'm seeing as far as USDC is concerned, which is a stable coin. And then we will also look at the broad market as far as the policies from the Federal Reserve concerning inflation and things like that. And so if you would like to learn more, please join me in this video by asking you to hit the like button, subscribe, and let's get right into the video. So the first thing that we're going to do, guys, here is, as I'm sharing the chart with you guys here, is really I think what's really going on here is, right now you're looking at the chart of Bitcoin, and this is the weekly chart. And when we look at the chart of Bitcoin on the weekly chart, what we really see that is going on here is it's really interesting, guys, because now on the weekly chart we can see that we finally are getting a green candle on the weekly chart after how many weeks? After 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks of red. After 8, 9 weeks of red, we're finally getting a green candle on the weekly chart. And this right here, I'm not saying that it's bullish. I'm just saying that it's actually pretty good, that it's showing us that we're maybe going into a small bounce, a shortened bounce, right? Because if you look down here, you look at Stochastic is oversold as well, which is good. Stochastic is oversold, and we're seeing that we're reaching some type of support, and we are bouncing off that support. And so this is on the weekly chart. So when I go back on the day chart, we see that on the day chart, Stochastic is, it's not oversold. It's somewhere basically, in the middle, right? In between overbought and oversold, right? It's right in the middle. And so we're finally getting that green candle. But guys, I have to tell you guys the truth. It's the truth is the market is not looking good. The truth is the market is really looking bad as far as I'm concerned. Because guys, when you look at these charts really show you that we are in a downtrend, and everything and all the signals are pointing toward a long-term downtrend. And that would technically make sense, because why does it make sense? It makes sense because when you look at the Bitcoin, the Bitcoin cycle, it's a approximately 4-year cycle where we have the Bitcoin halving that happens, and then we see Bitcoin skyrockets to the upsides, and then after that we go back into a bear market, right? And we've seen Bitcoin reach all-time highs, in the above $60,000, and then Bitcoin starting to go down. As we're seeing right now, we're trading at about $30,000, which is just just a little bit above a 50%, more than a 50% correction, right? 54-55% correction, I would say, close to 60% correction. And that's normal, right? We every cycle there is a bull market and a bear market, and I think we're actually going into a bear market now. And I think that a lot of people have to really now be careful as far as where they're putting their money in and where they're investing, because in the bear market, Bitcoin may go down by 60-70%, but the other altcoins are going down by 90, almost 96%. Like right now, Bitcoin is down like 54-55%, and when we look at other coins like the Cardano and the others, they're down like the Solana, they're down like 80%, 85%, right? So but that's even okay. And then when you have even others that are beyond those, they're down like already in the 90, close to almost 100%. So you really have to be careful. And I think that a lot of people are still thinking that the year is gonna be bullish and all. No, we have to tell each other the truth, guys. I'm really worried. And so this is what I'm seeing on the chart of Bitcoin right now. When you look at this, you see that the 50-day moving average is below the 200-day moving average, which is buried. The 200-day moving average is pointing downward. The 50-day moving average in blue is also pointing downward. Guys, that right there is downtrend. What are we seeing? We're seeing lower lows, and lower highs. It is a downtrend, but we have a pretty strong resistance right here around 30,000. And I think that if this resistance holds, then we may see the price stall here for a while before maybe going back to test, the $40,000 level before, maybe coming back down again. That's just what I'm personally seeing. That is as a possibility of what's, happening in the market right now. But it's not guaranteed because, once we fail at this resistance, guys, we're going down to 19,000, $20,000 level. So, we have to be ready for that. And so now when I move on from Bitcoin and I get into Ethereum, for example, and guys, it's very similar here. We see Ethereum 200-day moving average below, above the 50-day moving average, the 50-day moving average pointing downward, 200-day moving average pointing downward. Everything is bearish, everything is going bad, guys. So we really have to be prepared here as far as, anticipating more pain coming into the market, especially with the, all of the worries that are going on into the market with, people worrying about a recession and worrying about more inflationary pressure. And we're seeing the Federal Reserve trying to fight inflation with trying to hike rates, increasing interest rates. And that is inflicting more pain on the market because some people are also selling, especially with the, because technically inflation is supposed to be bullish for things like crypto. But the reason why it's not that bullish is because with the increase in interest rates, people are thinking that we're going to see a lot more default, and and you know what, guys, I think I'll keep this discussion for the end, where we're going to talk about inflation, where I'll explain more. But it's mostly people thinking about defaulting, and that's what's making people sell equities. And I'll explain more as far as why is that the case. But when we look at Cardano, guys, as I was telling you guys earlier, see here, Cardano is down 85%, almost 86%. And that's just how things work in the bear market, right? And Cardano has been holding somewhere around here, around the 60, about 40 cents to about 65 cents in this region. It's been holding, but everything is pointing toward a downward trend, right? And so after Cardano, the next one is Solana, guys. And with Solana, guys, it's the same thing, guys. We see here Solana is down right now about 85% as well, very similar to Cardano, right? And so and Solana has its own issues, a lot of issues that Solana has had, which we will go into this this article that I have from Analytics Insights. And here it's telling us that on June 3rd, Solana had an 8-hour outage. Solana suffered an 8-hour outage yesterday with its blockchain failing to process transaction. Problems like the recent outage are not uncommon in Solana recent months. Unsurprisingly, the price of Solana has fallen 12% in the past 24 hours as many crypto traders lost momentary faith in the project. The price of Solana is currently at 39.70 cents. Despite the price drop, Solana still remains the 9th largest cryptocurrency by market cap. It is also down 84% from all-time high of 259.96 dollars since in November 2021. So guys, especially Solana has had so many issues with its platform. It's things that we haven't seen with Cardano, which is why I like Cardano more. And I understand some people will say, hey, Cardano hasn't had the amount of project that have been built on Solana, and Cardano doesn't have that. Cardano are building a community, but we haven't seen any acts, we haven't seen any issues with the Cardano blockchain. Things like outages, like what we've seen like multiple outages. We see, like, I thought it was like 2 outages in 2021 or only just 1, and then now in 2022 we're seeing all these outages. There are so many issues with Solana, and it's becoming an issue. It's becoming an issue, and I just don't trust the blockchain anymore. I just don't trust it because they always have issues, right? And so, guys, the next thing that I wanted to talk about is USDC. When we look at USDC, this chart that I'm showing you guys right now, this is the USDC number of transfers just reached a 1-month low. So basically what we're seeing here is, in gray, we're seeing the price of Bitcoin, right? And Bitcoin is around $30,000. And in purple, we're seeing the number of transfers of USDC, and we're seeing that it's reaching really a low. What does that mean? A low in transfers means that people are not moving their USDC, because typically people would go into Bitcoin, be going to crypto from like, you know, stable coin. They will transfer it to an exchange, convert into whatever crypto they want, and then transfer it back into their wallet. But if people are keeping their money and they're not transferring it and they're keeping in USDC, that means people are very bullish on the market and on the outlook. And so, you know, we have to expect we have to expect some more weakness into the market. And so, guys, the last thing, as I was talking about inflation and talking about basically defaulting. This is something that I wanted to show you guys real quick. Is pretty much when you look at this here, this is a newsletter from this lady that her name is Lynn Alden. She's really good, and I like to read these monthly updates that she puts out, these reports, and these are for free, guys. You can literally access this for free, and these are really good market research that she does, right, from Lynn Alden. And you know, her website is up here. You can see lynnalden.com, and you can go there and you can, you know, read her newsletter, right? You can sign up and you can get these through your email and stuff like that. But anyway, here it says, causes of recent inflation. Consumer price inflation came up fast and has been running at 4-decade highs lately. So when we look here, since 2014, we've seen that in purple, or whatever that color is, kind of look like blue. Whatever, dude, whatever that color is. We can see that inflation was, you know, somewhere playing between 0 to 2.5%, you know, for a really long time, until 2020, where we saw inflation going from, you know, close to zero, you know, the consumer price inflation, to skyrocketing levels in 2022 of about 8.54% inflation, guys. And then at the same time, when we look at the effective fund rate, federal fund rates, we're seeing that the effective fund rate was close to zero for a long time, since 2020 all the way to 2022. And then now we're, you know, with the Federal Reserve trying to hike rates, we're seeing that now we're, you know, playing at about 0.83%, because the Fed, you know, want the rates to be somewhere between 75 to 100 basis points, right? 75 to 100 basis points, meaning 0.75% to about 1%. And you know, we're at about 0.8%, right? You know, 83 basis point, right? And so, guys, now let's just read what I have highlighted here. It says, and concerningly, by other credible ways of measuring it, the true cost of living has probably gone up even higher than the official number. That is true. And then here it says, a lot of money was printed while the supply of many goods and services was disrupted. So prices are higher now. At the end of the day, that sentence simply summarizes it. Some big price spike may cool off at some point as bottlenecks subside, but many prices will be at permanently higher levels now due to the substantial increase in the quantity of money. So, guys, basically, what does this mean? This basically means that because we increase the money supply, and she's saying that we may see some price, we may see some price decrease in certain aspect, in certain goods and certain other services. But for the most part, the prices that we're seeing now are going to be permanent. And so if they're going to be permanent, one of the reasons of that is because of, you know, how the money was printed and we had very limited amount of supply. So if the supply is limited and you have more money and the demand is high, that means the prices will increase. The reason why we didn't see much price increase in 2020 is because the velocity of money was close to zero. What do I mean by velocity of money? In 2020, because a lot of people were having issues with, were having financial issues, people didn't want to spend their money. So people were hoarding money, stimulus checks and all those things. People were hoarding. Hoarding it means saving it. They weren't spending it. But then after the pandemic started tapering off and, cooling off, people started going back out. And when people go out, people had saved a lot of money. People started spending. People started traveling. And guess what happens? Now, the money that was introduced into the system that didn't have any effect, now it has a certain velocity. Now, the velocity goes from 0 to 1 to 2. And what do I mean by velocity of money? Let's say if I have $100 right now in my hand and I give you $100. Now, that $100 has a velocity of 1 because I give it to you. Once you take that money and then you go and buy something with that money, now that money has a velocity of 2. And then if that person who bought whatever, they take who you bought from, they take the money that you gave them and then they go and restock after buying, the let's say the article that you bought from them. Now that money has a supply, as a velocity of 3. So now, once the money starts being spent, now that's when we start seeing spikes in inflation. So then now, since the federal fund rate is low and inflation was high, and because, people are complaining and all that, and, these people in politics, they want to be reelected. Now they want to fight inflation so that they can be reelected because, cost of living is high. Nobody's going to reelect you if the cost of living is high during your term in office. And so now they want to fight inflation. What does that mean? Increasing the interest rates means that they're going to make the cost of debt more expensive. And that's a problem because a lot of corporations and even the US government itself have so much debt. But the government is not really concerned because the government is fine. They can print more money. The problem is the companies, because if the cost of borrowing becomes more expensive, some companies will start defaulting on their debt. And when companies start defaulting on their debt, that company declares bankruptcy. And that's a problem. The company fails. And when it fails, you have a series of layoffs, people who don't have income, and that trickles down into the economy because less income means less spending. Less spending means the economy is going to take a hit and the economy goes down. And that right there is the problem. So when I was saying about defaulting and that having an effect on the equity market, like the stock market, and also currencies like cryptocurrencies, is because now people are like, well, if there is risk of recessions, then I want to make sure that I have money. And if there is risk of recession, then that means maybe some of these equities that I own, or even currencies that I own, they may go down, they may lose their value. So let me sell now so that I can maintain my purchasing power, which to some extent, because they're still losing due to inflation, but people feel safe having cash than having, holding an equity or holding something of value. So then that right there, now you have people who go into the market, they sell their Bitcoin, they sell their Ethereum because they want to keep the cash in hand just in case things go bad. And that's why we're seeing the bad trend we're seeing in the market. So guys, I hope that really made sense today. And I wanted to make this video short, but I think we're almost at 17 minutes already. And so, I hope that I provided you with enough value in this video. And if that was the case, please allow me to ask you to hit the like button, subscribe, and turn the notification bell, as it helps us with the YouTube algorithm to get our message to a wider audience. With that being said, I'd like to say thank you, and I'll see y'all in my next video on Sunday. Bye-bye.